Hello and welcome from Trend Signal for our review of the data and events the week beginning the 17th of November. On Monday, markets under a little bit of pressure following some weak markets overnight in the Far East. Japanese shares slumped following the publication of the prelim Q3 GDP, which posted a surprise fall, which was indeed a big surprise, actually, certainly putting Japan back in recession. I think it looks like the rumoured snap election and delay in this sales tax, I think so, an almost certainty now, I would have thought. Markets last week, equities generally did okay. FTSE was the better performing market. That rallied about 80 odd points, 87 points on the week, about 1.3%. US markets not so buoyant, although still up, grinding higher, I'd say. S&P up 8.4%, Dow Jones up 61 points, similar amount. But the DAX, that was down 54 on the week, or just over 0.5%. Really, I think the issues in Ukraine and the tensions are ratcheting up again there, and I think that has a direct impact on the German market. But as I said, equities continue to grind higher, but progress is tough, and a number of doomsayers are looking for another correction, hopefully not of the order of what happened in October. Let's have a look at the data and events coming out this week then. We're bookended with two speeches by Mario Draghi, the President of the European Central Bank. The one on Monday is probably slightly more important than the one at the end of the week on Friday, also highlighted here. But those speeches and what's said often will and can move markets. That'll affect the foreign exchange markets, bond and equity markets. We have a number of central banks reporting the minutes from their previous monetary policy meetings, starting off with the Reserve Bank of Australia overnight on Monday night, Tuesday morning. We also have our own MPC here in the UK reporting on Wednesday at 9:30. The big focus is on the number of dissenters. I think it's highly unlikely that we'll have any more dissenters. If anything, it's possible that we could have less dissenters as it becomes very clear that there are going to be no rate hikes for some time. The market is now pricing in the first rate hike now in Q4 2015. Compare this with August time when the first rate hike was sort of penciled in for Q1. So things have changed quite dramatically, and certainly following the publication of the Bank of England's quarterly inflation report last week, sterling has really missed a beat and fallen quite sharply actually on the exchanges, down over 2 cents against the dollar, which is 1.25%, and sort of opens up the 155 level actually on cable now. Other stuff, we've also got the other central bank obviously reporting the minutes from its previous meeting for the FOMC, or the Federal Open Market Committee, the rate setting committee of the Federal Reserve, the central bank in the United States. Obviously, anything that's said will be scrutinized for how hawkish the markets or the committee is getting. There was one dissenter, a dovish dissenter, the previous month, but I think that was following on from the turmoil in the markets. We don't expect that again, and if anything, it's going to be, I suspect it will probably be quite hawkish in its tone. For Thursday, we have a manufacturing data out from every major centre, starting off with China, followed by the flash manufacturing PMIs in the Eurozone. Also, we've got them in the US. It's referred to as the Philly Fed Manufacturing Index, the Federal District of Philadelphia, which is one of the largest manufacturing states or districts, as I say. Slightly softer data, but nothing too much to get worried about. It's just ebbing and flowing, but generally the US economy is still performing quite well. Early on in the week, we got some data out in the Eurozone. In fact, in Germany, the German ZEW Economic Sentiment Indicator, where they polled sort of 275 analysts and investors about the economy, and anything above zero is positive or optimistic, I should say. Anything below zero is pessimistic. You can see that we're only looking for a slight positive reading following a disappointing minus 3.6 the previous month. That will be looked at quite closely. I think the markets are generally quite pessimistic to a certain extent. So I think unless it's particularly poor data, I don't think the market will react too much on the downside. I think it's more likely that there will be a surprise on the upside. What other data have we got? We've got our inflation data. A lot of the inflation data really is so benign. If anything, should be referred to as deflation data. CPI in the UK expected unchanged from the previous month at 1.2%. We've got producer prices published also on Tuesday from the US. Cost of goods and services going into production, very benign, minus 0.1%. As I say, inflation is just not an issue anywhere really in the globe. That's certainly not in the major economies anyway. So not a big issue whatsoever. That's pretty much it for the week. Good luck with everything, and we will be reconvening again on Thursday at 8 o'clock. Thanks very much for listening. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.